Gold is holding firm above the psychological $5,000 level. With crude oil spiking and retreating, the Nasdaq under pressure, and the US dollar struggling to go above $99, gold is absorbing all of this without flinching. We will see today if gold is giving us any clues to its next move. This channel focuses on institutional capital flows between Bitcoin and gold, using structured technical analysis to understand how capital rotates between these two strategic assets. A global financial reset is underway, with governments and major institutions quietly positioning for a future where Bitcoin and gold form the foundation of the next monetary system. If you want to stay ahead of this structural shift, this channel is built to help you understand it early. In today's Gold XAU Institutional Technical Analysis video, you will discover that gold's price action is compressing currently above the significant round number of $5,000. The dominant range set in January and February continues to frame every move. The higher low sequence since the February structural low tells us buyers are not retreating, they are building. By the end of this analysis, we will give you the precise price zones defining gold's next move, what volatility is signaling about the energy behind that move, and what the macro environment means for gold's near-term direction. Welcome back. We are Bitcoin Capital Gold, a channel for serious traders and investors who want structured technical analysis and capital discipline across Bitcoin and gold. Each day, we evaluate 5 key structural questions. What is the main trend, and are gold's timeframes aligned? What is gold's higher timeframe structure? What are the key price levels we need to watch? Is gold's volatility providing any clues, and are there any geopolitical or other markets affecting gold's price? Let's dive in. Understanding gold's current price action requires us to start where all good analysis starts, with the higher timeframe structure. Each timeframe gives us a layer of context that the lower timeframe alone cannot provide. On the yearly chart, gold's trend is up, and the swing direction is up, the strongest possible alignment. For our analysis, we started at the structural low set in late 2022, and from that point, gold has only seen an upward trajectory. On the monthly chart, the trend is also up, with the swing direction currently up, aligned with the yearly. On the weekly chart, the trend is up, and the swing direction is up. All 3 timeframes show an upward bias. Unlike Bitcoin, gold's timeframes are fully aligned to the upside. That is the foundation everything else is built upon. Gold has closed above the weekly midpoint, the monthly midpoint, and the yearly midpoint. When price is consistently closing above the midpoints of its own timeframes, it tells us buyers are maintaining control, not just in absolute terms, but relative to the entire price structure of each period. The structural pattern is confirming an uptrend until proven otherwise. Now let's dive deep into gold's price action and the price zones that matter. Gold remains contained within the dominant range set by the 29th January all-time high at $5,627 and the 2nd February structural low at $4,423. Every session since has traded within those 2 anchors. The equilibrium of that dominant range sits at the psychologically significant level of $5,025, almost exactly $5,000. Gold is currently trading above that equilibrium, which tells us buyers hold the balance of power within the dominant range. What makes the current picture particularly compelling is the sequence of higher highs and lower lows constructing itself inside that dominant range since February. On the highs, 4th February reached $5,114, 11th February pushed to $5,145, and 2nd March extended that sequence to $5,434. Each high is higher than the last. On the lows, 6th February held at $4,670, 17th February held at $4,854, and 3rd March held at $5,005. Each low is higher than the last. Higher highs and lower lows, a textbook uptrend constructing itself within a defined dominant range. This is not noise. This is a structured, methodical buyer advance. On the daily time frame, that pattern of higher highs and lower lows above $5,000 is particularly clear. Each pullback is finding support at a higher level than the last, and each recovery is reaching higher than the one before it. That daily swing structure above the $5,000 level is one of the cleaner signals in the current price action. Gold has three Fibonacci support levels to be aware of. The first sits at $4,979, the second at $4,986, and the third at $5,014. Together, these three levels form a layered support cluster just above and around the $5,000 psychological level. The third March structural low at $5,005 tested this cluster and held. That hold is significant. It means buyers stepped in precisely where the Fibonacci analysis said they should. On the upside, gold has a Fibonacci resistance cluster to navigate. The first level sits at $5,369, followed by $5,383 and $5,385. These three levels form a tight resistance band well below the all-time high of $5,627. For buyers to demonstrate a genuine assault on new all-time high territory, they first need to break through and close above this resistance cluster. That is the next significant upside test. Volatility is our internal metric to gauge strength and direction. We use two measures, ranges and close to open. Weekly ranges are contracting, and that contraction in itself is a signal. After the standout Week 5 range of $926, when gold set its all-time high and corrected sharply, the market has been narrowing its weekly range consistently. Week 6 contracted to $691, Week 7 to $245, Week 8 contracted to $277, Week 9 compressed further to $188. Then Week 10 expanded to $423, a 125% increase week on week. That expansion after a period of sustained compression is worth noting. Week 11 is still printing, and we will report the full picture in our weekly roundup. On the daily, gold is producing average daily ranges of $121.60. On the close to open, the weekly picture is the most telling. Week 10 closed down $197, the first negative weekly close in several weeks. However, this is a very small figure relative to the weekly range of $423. It is a signal worth noting, but not one to place significant weight on in isolation. It is a signal which may be of more interest as the month develops. On the monthly, March is currently gold's first negative close to open after a long sequence of positive monthly closes. Again, too early to draw conclusions, but it is a data point we are watching closely. Let's look at what the key correlated markets are telling us about gold's environment. Crude oil spiked to just under $120 on geopolitical tensions before retreating sharply. It is now trading around $83. That spike and retreat tells us the market reacted emotionally to the news before reassessing. The geopolitical backdrop, US, Israel, and Iran tensions, has not been resolved and remains a factor we will continue to monitor. Sustained geopolitical tension historically supports gold's safe haven demand. The Nasdaq is showing no clear direction. The daily pattern has been one of lower highs and lower lows, and the Nasdaq has its own Fibonacci resistance zone between $25,481 and $25,556. Capping upside attempts. A Nasdaq under pressure with no clear direction historically supports rotation into gold as a store of value and a portfolio stabilizer. The question is how this will affect Bitcoin's price, given the positive correlation between the two. The US dollar index is struggling to hold above $99.50. DXY has a Fibonacci resistance zone sitting between $99.55 and $99.81, just below that psychological round number. If DXY continues to struggle at this zone, that historically provides gold with room to move higher. Bitcoin remains contained within its dominant range. Buyers have pushed towards $70,000, but it has not been convincingly broken on a closing basis. Bitcoin's inability to break decisively higher at this stage reflects that risk appetite across the digital asset space remains cautious. Every day at 7 a.m. EST, we publish institutional-grade technical analysis on both gold and Bitcoin. There is a reason we cover these two assets together. Gold is asserting itself as the defining store of wealth of our era, reaching all-time highs against a backdrop of war, inflation, and institutional demand. Bitcoin is simultaneously rewriting its narrative, no longer simply a speculative asset, but one that serious capital allocators are beginning to hold alongside gold. Whether your portfolio approach is conservative, balanced, or aggressive, the relationship between these two assets is one you need to understand. This channel is built to help you do exactly that. If you found this video useful, consider liking and subscribing so you don't miss tomorrow's video. What do you think of the levels we gave? Do you agree? Do you have your own levels you're watching? We'd love you to share your thoughts. Comment below so we can all discuss. There is a global financial reset taking place that will affect every one of us. At the heart of the new financial economy will be Bitcoin and gold. If you want to be ahead of this shift, follow this channel.